All right, hey, what's going on? This is Dan Keller, your mortgage advisor at New American Funding. I want to welcome you to another episode of Making Sense of the Markets. Today is Saturday, April 22nd. This month is flying by. This is probably going to be my most valuable episode to date. I've put a lot of research into this one, and I'm really excited. So I'm going to give you a quick overview. I'm going to talk about the market real quickly and interest rates and why and how they've leveled off over the last few weeks and why that's good news. Second thing I'm going to talk about is yesterday on Seattle Real Estate Radio, I had an opportunity to interview a veteran appraiser. Ridiculously incredible 30 minutes with this guy. I'm going to share the entire interview with you next week, but I'm going to give you a couple of ahas that I took away that will benefit you as a homeowner, a home buyer, or if you're a real estate professional. You're going to like these two tips that I'm going to share with you. And then the last thing I'm going to talk about is this dual market phenomenon that we find ourselves in right now. Bill Hart, a mentor, he's a real estate and lender coach, mentor of mine, a guy that has had an incredible impact on my business and my life, interviewed Larry Kendall, the author of Ninja Selling. And they're talking about in certain markets across the United States right now, we're finding ourselves in kind of a once-in-a-lifetime opportunity where in one market, you could own a home and sell your home in a seller's market where you control the contract and get top dollar for your house, and then purchase up in a buyer's market and get a deal. So we're going to talk about that, and I'm going to share some market stats that support that here in Pierce and Snohomish County, so you want to pay attention. So let's talk about interest rates real quickly and the market. The good news is over the last few weeks, the market has stabilized. It's kind of mellowed out. You have to understand this with all the news that's taking place right now in Syria and Korea and Russia. Investors park their money on Wall Street in one of two places, either stocks or in bonds. And whenever there's economic news, global news that is uncertain, such as war or natural catastrophe, investors tend to park their money in the safety of bonds, which tends to improve mortgage interest rates. And that's what we're seeing right now. So as you can see down here, let's jump down to the bottom. Government 30-year fixed rates are still in the upper threes. Conventional Fannie Mae backed loans, and that depends upon your down payment and your credit score and the type of property you're financing, but they're still in the low fours. So if you missed the last refinance boom and you think you can save some money on your mortgage, reach out to me. I'd love to run some numbers for you. It's a great time to take advantage of low 30-year fixed rates right now, or even low 15-year shorter term loans. The other thing is, it's a great time to purchase. Right up here, if you look at the Home Affordability Index, that basically takes into consideration a couple of key factors that right now in the marketplace, it's a great time still historically to purchase a home. So let me know if you have any questions surrounding that. So I want to jump into a couple of the ahas that I had, that I took away from my meeting yesterday, my interview yesterday with the appraiser. Top two areas to get the most value out of your home. He said if you're a homeowner and you have $50,000 right now to put into your home, these are the two areas where you can get top dollar. One, take a guess. I'll pause for a second. Take a guess. One, your kitchen. Renovate the kitchen. The second thing is master bathroom. So kitchen and master bathroom. Now, here's a big aha. The one area where you get the least ROI, the least return on your investment, landscaping. Unless you live in an area where every home has elaborate landscaping, you have to keep up with the Joneses in regards to landscaping, you don't want to spend a bunch of money on your landscaping. It's just for show. So hey, a good buddy of mine, Lance Otto at Keller Williams Marysville, gave me some stats the other day, and I dumped it into this funky little graph, and I want to share this with you. So this is that dual markets phenomena. So here's the hierarchy of this dual markets. I want to give credit where credit is due. Larry Kendall talked about it. Bill Hart, real estate coach and lender coach, interviewed Larry Kendall. One of the best interviews that I've heard lately was Dave Savage. He's a leader in the mortgage community, another mentor of mine, interviewed Bill Hart, summarizing his interview with Larry Kendall. Incredible information came out of that. So what I did is I went to my local market and I put together to see if we were in a dual market situation, and we are. So look at this. The green represents the $200,000 to $400,000 price point in Snohomish County. In March, last month, there were 500 homes that sold in the $200,000 to $400,000 range. Look at this. In the $500,000 to $800,000 range, there was only 180. So that's showing the difference between two markets. My point is, you could have a home right now in the $200,000 to $400,000 price point, sell that and be in a seller's market, get top dollar for your home, and then purchase up in the $500,000 to $800,000 range and reap the benefits of being in a buyer's market and get a potential deal on that. Here's some more data supporting the two markets that we're in. 42 days on market for the $500,000 to $800,000 price point. Check this out, $200,000 to $400,000, 13 days, less than a half of a month. So what does this mean and how does it look on paper? Check this out. Okay, so let me get this video out of the way. Here we go. So you currently have a house. Let's say you have a mortgage. You bought a house 3-4 years ago, and your monthly payment's $2,500, $2,548 a month. If you sell that house in the $300,000 to $400,000 price point and take the money out of that, you could put 5% down on a $535,000 home, and your monthly payment goes up about $600. You could take even more money that you get from the sale of your house and your monthly pay and put 10% down, and your monthly payment's about $29. Or get this, you could take the entire proceeds from the sale of your house, put down about $100,000, and your payment only goes up. You've upgraded to an entirely different home, your dream home, for $50 more a month. So if you have any questions on this, or you'd like me to run some scenarios for you around the dual markets, reach out to me. I'm here to help. If you found this information valuable, please share it. If you're getting this via email, there's a link to the YouTube video. If you're seeing it on social media, share this. Let's get this message out, and I want to be a resource for you, okay? I'll talk to you next week. Take care.